Welcome everybody to the Leaders in Housing Counseling call. We are, this is the special St. Patrick's Day edition. My wife is Keelan Siobhan Berry, so this is a serious day at our household, and we're happy to celebrate it. I'm Bruce Odor Palin today, and we're broadcasting from the NCRC conference, as usual, packed with lots of activists, housing counselors, and supporters doing their usual excellent job at this. And I'm going to join a panel this afternoon right after the call with Sarah Jarek, among other people, so it'll be good. And Shanice Gaines from NCRC will be on the panel as well. So just a quick run through on the agenda. And so Matthew, I'm not seeing the slides. Is that just me, or are they not coming up?
Hopefully it's just you. Maybe folks can let me know in the question box if there's an issue with the slides.
Okay, great. Excellent. So so quickly, just on the agenda we've got today, we're going to get lots happening on the federal funding side, and so Matthew will give us a good picture of where things are at on that. We're going to have DITEC, formerly Greentree. Kelly O'Bannon will join us, and so please feel free to raise questions and experiences. We also have our first escalation contact, and he'll talk about sort of how escalations will be handled in the future. Obviously, an important relationship that's been difficult in the past, and we're very interested in seeing a turnaround and have had some really good signs. So definitely, let's everybody feel free to jump in on that. I'm actually going to add language access to the agenda, which isn't on right now. I'm writing it in. So we've sort of had a disappointing setback on our work in language access, and a very, very strong response from the broader civil rights and housing communities. I think we're going to have a very sharp pushback on and making sure that FHFA, Fannie and Freddie really do the right thing here. So we will talk about it in some detail on the call right now. We'll have a sign-on letter sponsored by the Leadership Conference on Civil Rights and the Americans for Financial Reform, specifically around this issue, and lots to happen there. We're going to just do a quick update on student loan debts and repayment plans. I've now gotten nailed down what Fannie and Freddie and FHFA's plans are, requirements are on this, and they're all pretty mild. But what I need to know is, are we still seeing lenders doing 2% of unpaid balance as a requirement on how they value the repayment plans? If that's happening in the field still, we need to know about it. We need to pinpoint who's doing it. So please try to figure that out. Shoot it to us during the conversation we'll have later in the call. We had an excellent call about the Affordable Loan Solution Mortgage. That's the one that Self-Help, Bank of America, and Freddie Mac are doing, 97% counseling required. So has anybody tried it out? Let's find out in the field. Is it working? Are there issues? Definitely, if there's any problems, please, we can redline these very quickly and get to senior management about this. So let's know what your experience is. And then we'll also talk about NHRC membership. 2016, hopefully the year that your group is going to join and strengthen all of our work. We really appreciate the members who are on board already. And then we'll talk a little bit about the next call coming up. Will be about this issue of credit scores and how it affects communities of color, part of our series on the wealth gap and race and home ownership. So with that note, let's get started on the federal funding update. So Matthew, where are we at on federal funding?
All right, and so I'll just quickly mention it seems like folks are seeing the slides, so that is good. And Bruce, as he mentioned, is at the NCRC conference, I think on a cell phone, so the audio may not be perfect. I could hear him. It's not coming through perfectly, but folks will just please bear with us. So with the federal funding, so I think we've mentioned we submitted the sign-on letter to members of Congress in the last couple of weeks. We ended up with 360 groups signed on, which was a great showing, especially because we had a relatively short turnaround. It was only open for about a week. So thank you everyone that signed on. So that also led to Dear Colleagues letters. So there's kind of two ways that members of Congress express their, where they would like to see federal funding go. One is that they submit a letter directly to the relevant subcommittees saying these are my priorities. But the easier way is members will circulate Dear Colleague letters saying, please sign on to supporting this amount of funding. So we were able to, in the Senate, Senator Menendez, who's been extremely supportive of housing counseling, he circulated a letter, as he has for the last few years. That was just for asking for $60 million for the HUD housing counseling assistance. And he was joined by 20 senators, which was actually an increase over last year. There were 15 signed on, so that was a really good showing in the Senate. And then in the House, Congressman Conyers circulated a letter. He actually did two. He did one for asking for $60 million for HUD housing counseling, and also for $40 million for the National Foreclosure Mitigation Counseling Program. And those we did great on. There were 70 representatives signed on to the HUD housing counseling letter, and 59 signed on for the NFMC funding letter. So those were both improvements from last year. So it was a really good showing. So I think all of the outreach that we've done and that folks have done to their congressional office really helped to get that support. One other thing I wanted to mention is kind of news coming out of Washington this week. So yesterday the House Budget Committee did pass a budget, but 2 days ago there was a story in Politico basically laying out that it's a very realistic possibility that the whole House won't pass a budget, and that a possible outcome of that would be a series of either one or more continuing resolutions for the coming year. Some of the folks who voted to pass it out of the committee yesterday said they were just kind of doing it for leadership, but planned to vote against it. And the House Freedom Caucus, which is the kind of far right caucus in the House, which is about 40 or so members, said they would not vote for the budget as it currently stands. So it could be very difficult for Republicans to get the votes to pass a budget, which would make a continuing resolution a possibility. So just wanted to kind of flag that for folks, that we're going to continue doing all the work that we do to try to get as much funding as possible for the HUD housing counseling and NFMC programs, but the possibility, kind of as always, exists of continuing resolutions, which would, for our purposes, would not be the worst outcome, in that we would have to continue to fight to make sure that NFMC was included in that, but level funding for our programs would not be the worst thing that happened. So that's all I have to add on the federal funding, unless Bruce wants to add anything.
No, I think you've got it. That was good. Very interesting. Okay, so hopefully people can hear me a little bit better now. And just a quick mention, just in case it didn't come through clearly, we will have some time at towards the end of the call to talk about the student loan debt repayment plans and how they affect mortgages. So if you're seeing clients that are required to have 2% of unpaid balance as the way that in the debt-to-income ratio, the way that's being calculated, rather than the lower amounts that Fannie, Freddie, and FHFA require, which are really, we'll talk about at the call. Please bring that up and keep that in mind. And also, if you've had any experience with a new self-help Bank of America, Freddie Mac product, we're very interested in how that's going. But at this moment, let's go to Ditech. So Ditech purchased Greentree, the mortgage servicing company, one that I think many groups have had a history with in the past. And to be quite frank, it's been a difficult history, and they have not been particularly responsive to housing counseling. We have not had escalation contacts. They have not participated in many of the forums that we have used. So Greentree has been a more difficult player in our field. But when we did the survey, and Greentree did not come in last. They came in just above Caliber at next to last. They reached out to their credit, and we immediately started talking about, well, we need escalation contacts, we need participation, we need to really start thinking about how you might integrate housing counseling more effectively in the programs that you're doing going forward. And the response was receptive. On the spot, we ended up with an escalation contact, Martin Bird. So certainly, if anybody's had any experiences, we would love to hear about that. Right now, you can put that into the question box. And certainly, if you want to ask questions about problems, this is an opportunity as well. We have today Kelly O'Bannon, who's the Senior Vice President of Default Services at Ditech. And he's joining us on the call, and will be kind of representing where Ditech sees themselves going in the future. And he just informed us that he's really on the second week of the job. So we
can call it third, but
third week. There we go.
Third week.
Okay.
I'm a seasoned veteran at this point.
Okay, so may not be on top of all the history of the past, but absolutely don't be shy about bringing up what we need to bring up. So with that note, after 3 weeks of experience, Kelly O'Bannon, welcome. And
you,
Kelly, would you like to jump in and give your own introduction?
Sure, absolutely. Before I do that, I did want to mention, I heard you mention self-help a couple of times. In a past life, in my prior company, we had a very long history with I say very long, call it a 5 or 6 year servicing history with self-help, and it's always a good relationship and a wonderful organization. So I was very pleased to see new programs that they were able to get back into the lending business again. So very happy for those folks.
Excellent.
But sure. So a little bit about me, as Bruce mentioned. I joined the company on March 1st, so I'm call it 12, 13, something like that, actual working days at this point, somewhere in that range. Very excited to join the company. One of the main reasons why I was excited was seeing the president of the company give a presentation around the values of the organization, the customer experience that they're trying to build. So I felt extremely comfortable with where the company was going, and very excited to be a part of it, especially on the default side. While I'm new to the company, I'm not new to the default space. I've been in the mortgage business for about 20 years at this point, and literally 100% of it on the default side, primarily always in the loss mitigation space. That being said, as Bruce mentioned, Ditech essentially changed names or changed from the Greentree name in August of 2015. So obviously a lot of you have history with Greentree. Overall, it's a diversified mortgage banking firm that's focused on supporting sustainable housing, sustainable home ownership, and really want to treat every mortgage as an opportunity to provide a service and not just a product. The goal of becoming a lifetime partner for the customers. Ditech originated $25 billion in 2015. It's a top 20 originator, so it's a very important part of the overall business from a service perspective. The core values of the company are essentially honesty, responsibility, transparency, and creativity. That's what serves as the foundation, and really with the goal of providing a superior customer experience, exhibiting behaviors such as helpfulness, responsiveness, efficient, and fair. And what I can tell you after being at the company for just a couple of weeks at this point, I've already been involved in programs where we are working to drive these core values across the organization. So from an overall portfolio perspective, the company does consist of 2.2 million mortgages and servicing. It's one of the 10 largest residential loan servicers in the country, and has been for the past 3 years. The servicing book is almost all third-party servicing at this point, which means that we are subject to investor guidelines and requirements. That being said, The vast majority, over 75% of the servicing book is Fannie Mae and Freddie Mac servicing. So that essentially what I mean there is the guidelines are very well known. All of you guys on the phone certainly know them inside and out. So overall, there is a new management team at the company. There's a huge focus, as I referenced, on building a borrower experience and customer retention. And really what it's all about is we want to assist customers and focus on distressed asset servicing, helping resolve situations. As being new to the company, I'm here to help, focused on housing counselors, and essentially our mutual goal of helping our customer and your customer. So that being said, there's a couple things that we're going to do immediately. So we're working to expand our portfolio options to open the entire servicing portfolio up to the Hope Loan Port. We know that will make it much easier for the community of housing counselors to work with Ditech. I don't have an exact time frame on that. I was on a call with them last week, and we're working diligently at this point to make it a broader portfolio option for you guys to work with us. And so from an escalation perspective, while the SPOC is always got to be the first point of contact, they're theoretically going to be the person that can provide the borrower or the housing counselor the most immediate feedback. That being said, we recognize that doesn't always happen, and when that doesn't happen, you guys need and deserve an escalation point. So I'm going to really appoint 3 escalation points. Number one, we will have one immediate person. I'll provide that name to Bruce. Unfortunately, it's not going to be Martin Bird. I think he'll be excited to have his name published. And I know Martin's been working as that person for the last couple of weeks, or the last week or so, since we've had contact with Bruce and his team. And I'm seeing all those emails myself. And we're working on those extremely quickly, and I think some of them really had almost hourly or same day turnaround. But Martin will not be the actual escalation contact. It'll be a supervisor in my loss mitigation team. That individual's boss will also be an escalation contact, and then myself will be the third level escalation contact. I hope that I don't ever have to talk to you guys, because that means that you've essentially gone through 3 people before you come to me. But with all of those options too, I think that you'll see an immediate response from the company, and really it's our objective to create a better relationship. Yeah, we appreciate the opportunity to come on the phone and talk to you guys on your monthly call, and certainly look forward to hearing better things in the future. So that being said, Bruce, and unless Bruce or Matt, you guys have any immediate questions for me, I think we did want to open it up a little bit.
Yeah, no, and just to say, Hope Loan Port was one of the big issues that people have been emailing me about. So it's good that you've taken that action already, and
yeah,
we'll be eager to know when it's available.
Last week, and are working on it.
Good. Okay. So Matthew, what questions are lining up?
I'll just reiterate, we did have a few questions on Hope Loan Port. So just to reiterate, that is an issue that there's a lot of attention or a lot of interest in. So I'll kind of share. We have a couple kind of questions comments questions. So one person asked, they have a client who's been in the processing a modification for over 30 days and hasn't heard from the Ditech rep. And his question was, what is the best way to escalate? So I think for now that's Martin Bird. And is there anything that you'd like to add to that?
No, for now that's fine. And Matt and Bruce, you guys have my email address as well, and so you can send it to Martin and me at the same time, and we'll get it turned around as fast as possible.
Okay.
What I can tell you, I mean, even though a couple weeks, obviously, I'm paying a lot of attention to data and things of that nature, and it's extremely rare that we have an instance go beyond 30 days at this point.
All right.
But that's clearly a focus from a regulatory perspective. But I mean, more than that, from just a service perspective.
All right.
So do you want us to, so you just said that we should CC you. Should I put that out onto the list with both your names?
Sure. So when I hang up, I will type up an email that gives you the contact information for the escalation points. So you'll have the primary escalation point and then the 2 subsequent ones.
Okay, great.
Just some kind of general feedback. So we've had many issues where our clients needed to find an attorney in order to get a modification. Reps have flat out said the file would not get modified. And they said there's been a lack of accountability and inconsistent information. The last real question is whether this person has asked if DITEC would be willing to basically do a conference call with representatives from the housing counseling agencies so that they can kind of do some more feedback and kind of problem solving, thinking through the issues, and really just have more of a dialogue with the housing counseling community.
So that's an interesting question. So let me run that one up a little bit and get back to Bruce and Matt with some options for that.
All right. We did just have a few more come in, so I'm just going to read these. So it says one of the keys is helping borrowers in distress is getting borrowers in distress, getting to them early. In the past, our organization has worked with services to do joint or co-branded outreach to get borrowers into our offices and working on mortgage workout solutions. Would DITEC be interested in that type of effort, and who should we contact?
They can contact me directly on that.
Okay, great.
We would entertain some options there. I mean, I know that's really a lot of what kind of Hope Loan Port is out there for, and that's one of the reasons why we do want to open it up, is because it gives everyone more options to come work in the company. And whoever had made the statement and asked the question that earlier is better, we 110% wholeheartedly agree with that. I've looked at, as I said, I've been doing this for a very long time, and it obviously, the faster you get involved with a borrower to resolve the situation, be it a short sale, deed in lieu, or modification. Obviously, modification is generally going to be the preferred option here, but from that perspective, greater success the faster. So better penetration and saving homes. Secondly, if you actually look at long-term redefault rates, historically in my organizations, the sooner that we modify a loan, the better off we see redefault rates. I mean, it's drastic difference, but between catching somebody a year past due versus catching somebody and helping them 60 to 90 days out. So I 100% agree with that. The company agrees with that. And early conversations with some of the leaders from the on the SPOC side, everyone's under that same impression, and we're working to make changes to make it easier from a loss mitigation perspective as well.
All right. I have a few more just kind of general feedback that I'll share. So this person says that this week they sat down with a client with DITEC. They had questions on loss mitigation options. Contacted DITEC and was transferred several times, hung up on and left on hold for over an hour and a half within the 4 phone call attempts before we finally got someone helpful on the phone. And I think this is pretty similar. This person said they have 3 clients, all that say they can't reach a live person at DITEC, but it directs them to a voicemail on hold for hours with no answer or phone system hangs up on them. When we conference called DITEC, all representatives stated that they had phone issues or IVR problems that are being resolved, but as of last week still haven't. One of the representatives stated that their computer system recognizes the homeowner's phone number on file or mortgage and will automatically route them a voicemail, or the homeowner will have issues connecting to any department.
Sure. I mean, so first thing I would say, I mean, if those things happen, I'd love to know the phone number that the call was coming in from, and see if we can trace it and see if there is some sort of auto disconnect that's going on. Secondly, if somebody's sitting on hold for an hour and a half, and so I mean, put it this way: if you talk to an agent and that agent puts you on hold and you sit there and they never come back to you, I'd love to see, give me an estimated time frame that happened and the phone number that it came in from, and let us trace it back. I mean, that's conduct that's clearly not acceptable in any organization, certainly not this organization. I mean, if those things are going on, you are the eyes and ears. Let us know that it's happening. We would certainly be able to trace it. There's extensive quality control processes that take place in the organization, and my teams in the loss mitigation space as well as in the SPOC space. And those things shouldn't be tolerated. If it happens, please let us know.
So I think what we should do in both those cases is if the counselor would just put the information in an email and either send it to me and I'll pass it on to Kelly O'Bannon, or if we've got his email address available, send it directly. I think what we've done in the past with servicers is where they've done an investigation and reported back to the counselor about what happened.
Sure.
These are instructive for everybody, and typically, I think we always included the loan number as a way to figure out what was happening with the case as well.
Sure. Absolutely. Yeah. The day that it happened, the loan number that it took place on, and an approximate time that it happened, along with the phone number that it came in from. If you have a name of who it was that put you on hold for an hour and a half, add that as well, as much information so we can trace it back and figure out where it's happening. So.
All right. And
or if you're not able to connect, whatever.
And we've had a few other folks with the same or similar issues, so we'll just kind of for those folks as well, the same thing. Just pass that on to either Bruce or Kelly directly. A few other kind of client-specific questions. So one person said they had a homeowner go through the Oregon foreclosure avoidance program with Greentree with a promise to complete the ongoing loan modification, and that this was last February. What should this person's next steps be to try to resolve this?
So the loan hasn't been permanently modified. Is that what I got there?
That's my take on it. Yeah.
Okay.
That it's a year out.
So we would have. I'd say that again. I mean, put that one directly in an email, and we'll get to the bottom of it quickly. And if it's ready to be permanently modified, there's no reason why it shouldn't have been, and figure out exactly what the situation was and get it resolved.
All right. Another client-specific question. A recent Ditech customer recently received a permanent modification contract when his mortgage was owned by RCS. Loan officer at Ditech said they will not honor the permanent modification contract because the customer wants his ex-wife's name removed. Client had previously sent RCS quitclaim deed and divorce papers. Is this right? I'm not sure if we're getting too specific now, but if you have anything on that.
Might be a little specific, but I mean, from honoring a modification, there's no reason why a permanent modification would be honored. As far as the specifics around removing a name from the mortgage and things of that nature, that's getting a little bit technical, and I can't tell you I know exactly what Ditech's policies are around that off the top of my head at this point. But if there's if the name should be legally removed, I can't think of a reason why the company wouldn't legally remove a name. There's a difference obviously between a name from a note versus a mortgage, but.
So again, can we just make this into a quick email and have somebody investigate, get a good solution for the counselor?
Absolutely.
All right, just a couple more questions. Someone asked if Ditech would be willing to host outreach events where I think they have in mind kind of Ditech and housing counseling, local counseling agencies doing outreach events together to work with clients.
Sure, and the company is currently participating in some right now. I was just reading one where there's an event upcoming in Jacksonville that we're participating in. Secondly, we are also working with Fannie Mae, and we'll open this up to broader than just Fannie Mae, but we're going to begin doing servicer days and call it downstate New York. So we have one scheduled on May 10th. It's going to be in Suffolk County. So those are the kind of things that we're starting to work on. And if we have volume where it makes sense to do particular days in certain markets, then I think it's something that we would absolutely review. I'm not exactly sure what the history has been, but and like I said, in a couple of weeks, I'm aware of 2 particular events that we're already participating in. So if it absolutely makes sense and that's something that we want to do, or that we would want to partner with someone on, absolutely.
Great. And this is not, the person says it's not really a Greentree DITEC specific thing, but they just wanted to point out that Minnesota has a dual tracking loss mitigation statute that servicers often ignore. The statute allows for borrowers to submit an application 7 days before the sale versus the 37 days for the CFPB rule, and the servicer must halt the foreclosure sale and review the workout package. So I think this person is just trying to make sure that you, Kelly, and I guess others are aware of this Minnesota state-specific statute.
Okay. Thank you for the information.
Someone else just asked if you're working with, this is a statewide New York group, asked if you're working with an agency in Sullivan County, with a counseling agency.
No, it's been, at this point, it's something that we're doing in partnership with Fannie Mae and for Suffolk County. And so really what it'll be is it's called Suffolk County. So the actual court there, we'll go in on that particular day. Fannie Mae has specific criteria for loans that can go to the actual settlement conference. And so we're partnering with Fannie Mae to identify those loans as well as our outside counsel. But it's our objective to try to open it up to more than just Fannie Mae since we're going in and spending the time. The flip side of that is we are a little bit at the mercy of the court as to how many loans we can, or how many individual sessions we can make happen that day, because it is sanctioned by the court in Suffolk County.
All right, and I'll just mention, so that question was from Empire Justice Center, which is a statewide group in New York, and I know they have a presence on Long Island. So they may be a group that you could partner with in the future.
Okay, interesting. Thank you.
All right, I think that's all we've got for now.
Okay.
Okay, great.
Again, appreciate the opportunity and time. And, look forward to doing this in a year and hearing about improvements.
Okay, that sounds good. We'll look for the escalation contacts, and we'll also try to keep the conversation going about other ways to incorporate counseling more effectively in the loss bit program. There's a lot of conversation going on about what will replace HAMP, and our view is that having housing counseling as the intake will be is the best practice and best performing way for servicers and for the homeowner. Good. Well, thank you so much, Kelly, and we will look for your email, and certainly anybody who's got individual cases that they wanted to elevate here, package them up in an email with your contact information, the loan number, phone number used, date and time, that sort of thing, if that's relevant, and we'll make sure it gets to them. Thank you so much. Let's move on. So I wanted to kind of give, I'm adding this to the agenda. This kind of broke loose yesterday or the day before yesterday, and has really taken on some legs. So in the work we've been doing to redesign the mortgage application, we've certainly got the data fields included. It looks like we've got the notice that if somebody signed an authorization to be referred back to counseling, I think that's built in. But we were just told that all our work about giving home buyers the option to designate which language they would like to have communications in, that was not included in the application, and the application is now closed and baked, as they say, which so that it's done. And we've been in a very kind of robust conversation with Fannie, Freddie, and FHFA about how to make this work. And while we don't have resolutions, the big issue was the liability issues that lenders felt that they had if they knew what the language requirements were and didn't meet them, or language preferences were and didn't meet them. So we had agreed jointly to go to the CFPB and ask them to help develop guidelines on this. The CFPB has said, frankly, that they can do it under the current guidelines, that nothing new is needed. And we've raised this with Director Cordray at the CFPB, and he indicated that he understood both sides. He felt like they could do it without any special guidance, but understood the urgency of this, and that the CFPB would work out a solution. We were supposed to have a meeting yesterday. If you saw the news, the metro system was closed in D.C., and key people inside D.C. couldn't get there, so us out-of-towners could, but we ended up postponing the meeting. But in the process, learned that the mortgage application had been finished, or that part of it, and that they weren't going to include language preference. This, to us, is a major and very troubling decision. There are some things at some moments where you just say, this is not the way that we need to proceed. The redesign of the Uniform Residential Loan application, last time it was done was 20 years ago. Are we going to wait 20 years before we build into the system a way for people to easily identify what language they'd like to communicate in, attach it to the mortgage, and so that it's permanently there? Doesn't matter after the loan has been boarded, who securitizes it, who takes on the loan, who services, if the loan is sold, if the servicing rights are sold, all that stuff, if that information travels, there's never an issue about what language they would like to communicate in. This is one small systemic solution. It's not the solution to all the problems, but it's a piece of the solution. And the idea that as far as we've come on this, that they would close this down is really unacceptable. So we have raised this issue in the broader housing advocacy community. The Leadership Conference on Civil and Human Rights and Americans for Financial Reform are issuing a joint letter. So we will, and we're part of the project, I'm the contact person. The letter hopefully will be out tomorrow. We will circulate it on our lists, so please, if this is an area that you support, please sign on. Even if you don't have a huge language need, this is an area where, given the changing demographics of America, this may all become more and more important, especially in the home buying field and in the foreclosure fields. This will also be circulated among all the civil rights groups, and we already can hear a broad response and deep response, and we and other groups will do some outreach on the Hill, and we think that there will be a number of Congress people and senators who will be deeply troubled by this and will engage. Our goal is to communicate very strongly to Mel Watt at FHFA, to the CEO of Fannie Mae and the CEO of Freddie Mac, that this is absolutely unacceptable. They need to reopen the redesign of the mortgage application and work with us to get a solution to the issue. We are making, so that letter should come out tomorrow. We're on a very short timeline. This is one of those issues where if you let it go too far, then it becomes impossible to pull it back. And so we'll probably have a Tuesday deadline. And so every group that can move that quickly, and I know it's hard for groups sometimes to do that. If you can't, that's okay. We may keep the letter open, but we want to get this letter out on Tuesday to Mel Watt and to the CEOs of Fannie Mae and Freddie Mac. So breaking issue here. I think we could really use your help on it in terms of lots and lots of signature, broad spectrum around the country. Certainly this is one that's not exclusively to housing counseling groups, so if you've got other groups in your area that are working on civil rights issues, on immigration issues, on the kinds of things that would resonate with them, feel free to ask them if they'd like to sign on as well. Goal is to get the letter out on Tuesday and start pressing for meetings, and also get letters directly from members of the House and Senate. Okay. With that note, let's move on to the agenda again. So, you know, as we've done a lot of work on the student debt issue, and so and I finally nailed down where all the largest securitizers or insurers of mortgages are on the question of how they handle the repayment plan when somebody's applying for a mortgage. So we had received reports that lenders were not taking what the repayment plan amount was that the home buyer was paying, and instead they were paying 2% or 1.5% of the unpaid balance, which for many people would be a very big number, or the original amount that was due before the repayment plan. And it turns out that Fannie Mae requires 1% of unpaid balance or the original amount, but I have it on, you know, the word is sort of leaking out that they are seriously re-examining this and may go to just using the repayment amount. Freddie Mac uses the actual repayment amount, and FHA uses the actual repayment amount. So the big question is who is charging this 2% or 1.5%, or is there some other formula? And I'm assuming that this is lender overlays, but it would be very helpful to identify who they are, and we could literally reach out to them and ask them to explain why this is, and have, you know, this could be a congressional issue, this could be a campaign issue, this could be an Elizabeth Warren issue. I mean, these are kinds of things that if we have the correct and accurate information, we can move quickly to kind of change the marketplace on this. So please put in your question box or shoot me an email if you've got evidence of any buyers who where it's treated as 2% on the debt-to-income ratio on the repayment plan. So let me just pause. Matthew, have we gotten anybody to weigh in on this?
No, we have not.
Okay.
It just came in. There's a big issue with lenders not accepting the income-based repayment plans. Instead, they will charge 2 to 3% of the outstanding student loans.
So the person who just wrote that, okay, go ahead.
No, sorry, you go ahead. I'll come back to that.
The person who just wrote that, we need to know which lenders, where is it happening, what's the kind of loan. So this is how we're going to change this.
They say large institutional investors for student loans, but I think Bruce is asking what the mortgage, which mortgage lenders are. Is this the where you're seeing that? And so hopefully that person can get back to us with that. Someone asked if the Fannie Mae repayment plan is as an investor or servicer. It's in Fannie's role as an investor. That's what their guidelines are, correct?
Well, I mean, it's, no, we're talking about their underwriting guide. So this is everything.
Yeah. Okay. What is meant by actual repayment amount? So could you just elaborate on that, please?
So, so this would be if somebody has student loans that more than they can afford, they go and get a repayment plan through the department. So it's federal student loans, get a repayment plan through the Department of Education, and it reduces based on their income what their payments are. That amount, that reduced repayment amount, is what we're saying should be. So this is permanently done. So this will always be the relationship that people have with making their student loans, and the amount can go up and down depending on their income, but it goes up if their income goes up. So they have the ability to pay for it, and if their income goes back down again, then it goes down again as well. So every year it gets recertified. So this is the perfect kind of thing where that number, and it's forgiven at 20 or 25 years, 10 years if it's public service option. So this is a perfect example of where there's a bad underwriting rule that is not, that nobody has been able to explain to us why on earth they're even using it. I mean, it's just fascinating to ask Fannie when they were at 2%, well, why on earth are you doing this? So they just say, we just don't understand it. But, and I think it's going away. But the problem is we believe that it's lender overlays that are applying on that. So I hope that answered that question.
Yep. Just the original comment had gotten back to us. He said so far it's been Wells Fargo, Home Mortgage, and Bank of America. And then follow up to the previous questions is just asking, so the investors will accept $0 as a payment if that's the person's actual repayment amount. I think the answer to that is in theory, yes, but the question is whether in practice whether that's happening.
Yes, that's what we're saying. If it's 0, they should accept 0.
All right. That is all for questions or comments.
Good. Okay. Well, so we may want to reach out back to the person who identified Wells and Bank of America. This is exactly what I know. And interestingly enough, I have asked both of them, and they have not gotten back to me about what their practice is. So that would be very helpful. Good. Thank you. All right. Exactly what I wanted to know. So if others have experiences like that, let us know. So last week we had Kathy Cummings, or 2 weeks ago we had Kathy Cummings from Bank of America and Mike Calhoun from Self-Help on about their new product. And so has anybody used this? What's your experience?
Maybe you could just give a little, no, maybe you could just give another quick overview of the program for folks that weren't on the call, and we'll see if anything comes in. Okay,
so it's a 97% product. Housing counseling is required, and it's through Bank of America. It's actually available nationwide, so even where Bank of America doesn't have its footprint, you can borrow through their call center, and it's the product was designed by Self-Help in consultation with Bank of America and Freddie Mac. Currently, there is a 660 minimum credit score, but the expectation is that they are going to try to lower that credit score to as they get more experience and get more product in. The great thing is housing counseling is required, so we are. And Bank of America will pay the counseling agency $300 per application submitted. So not even closed loan, it's per application. So this is kind of a breakthrough program for us, partly because it's widely available. Groups that can apply for it can use this are HUD-approved housing counseling agencies that are part of their program, which is Connect to Own, I think it's called. It's very easy for groups to qualify for this program and participate. So if you're not currently qualified,
let me just jump in there. So the only feedback we've gotten is from 2 folks who have said that they emailed it's Bank of America to become a partner and haven't gotten a response, and the other person said they're waiting. They submitted their application and they're waiting to hear back. So that may be something we need to keep an eye on is making sure that as groups are registering or applying, that they're not running into issues with that.
Well, that's interesting. So, I mean, if it's been more than a week, please let me know. We're happy to connect you with Kathy Cummings. You'll get great service out of this. We definitely want groups to be able to easily access this. So if there's any stubbed toe, we'd be glad to make sure to help facilitate a conversation with BofA to help get things corrected.
All right. We had one other person kind of echo the same, that they're waiting to hear back, but no one said how long it's been. Someone else said their application is being mailed today. Someone else asked if we could just repeat the name of the program, and I'm not sure whether they mean of the mortgage product or of the partnership with BofA that you need to do, but maybe just give them both.
Okay, well, my weak memory thinks it's Connect to Own is what it's called. Doesn't really roll off the tongue, and that's the program where housing counseling agencies have a relationship with Bank of America that allows them to submit this loan product and to get paid $300 per submitted loan. the mortgage itself is called the Affordable Loan Solution Mortgage. It's on the top of the screen. I think that answers those questions.
Yep. And someone else asked if we could pass along the information on the application, so maybe we should just send out an email with the information that folks need to know.
Absolutely. Let's do it.
All right. And a few other people let us know that they're participating. Someone else that they have an event with, I guess, with B of A on April 2nd to help promote the product. So there's definitely some folks who are engaged with it. And that is all we've got for questions and comments.
Okay, so Matthew, remind me to ask Kathy Cummings about how long people should expect it to take when they make application, and maybe we can report back next week.
All right.
Cool. Okay. Well, it's very helpful. Thank you for your participation here. So let's see. I'm going to talk a little bit about, I think we've talked about this some, but it's sort of top of mind, and we have a few minutes here. What's happening with what replaces HAMP. And there is a very active push by especially Chase and Quicken and some parts of Fannie and parts of Freddie for doing a streamlined modification. And so this would be low documentation, so that has many pluses. It's much easier to qualify for. And it would be a very kind of speedy modification that you would get. And think about it as similar to Tier 2 on HAMP. It would be, as HAMP, as Tier 2 is, it would be priced at market rate. And the way they would get the discount and the pricing in the mortgage payment would be by extending the term out to 40 years. And the Quicken model is with no interest rate reduction. Some of the streamlines might do some interest rate reduction, we think. But the problem is it's and the documentation, because you're not figuring out what people's incomes are and doing the mortgage payment tied to what the income is, there's little or no documentation you need. We're arguing for a counter proposal, and while it's still kind of in the design stage, the idea would be that people go first to housing counseling. Counselor helps put the package together for people, and then they get referred. Then they get referred to the lender for an income-based modification as the top of the waterfall. We're saying the steps would be interest rate reduction, extending out the term, and not for 40 years but for 30 years, and then principal reduction or forbearance if principal reduction is banned by the PSA. But the idea is let's figure out an affordability for each individual customer that is tied to what their actual household income is and what their capacities are. And we actually left it open, kind of what the affordability formula might be, as long as it doesn't exceed 31% of household income. So lenders could use 31%, or they could use a residual income model. So you take what people's income is, you take what their expenses are minus their housing, and figure out what cushion is there, and figure out what would be the affordable payment out of that. The VA does that in the way that they figure out, loosely how they figure out whether who qualifies for a mortgage. They use a residual income model. And, you know, there's no perfect model out there, but, you know, it's an idea that's around, and it looks like there's some versions of it that servicers might be interested in. You might have some other ideas of what an affordability model might be out there, and we'd love to hear about it. And if you have time, you could bring it up right now, or you know, shoot it our way. But the idea is that we really do a comprehensive program, income-based, If people can't get the documentation together or for some reason it doesn't come together, then you offer them the streamlined model, which is the market-based rate, extend out, hopefully not for 40 years, but whatever it takes, and then get the family back, get them an offer, and either they can make it work or they can't. You may have heard about Quicken's One Mod, and that's an extreme streamlined model. And at the recent MBA conference, the Quicken staff were all around with One Mod T-shirts, and they're heavily promoting this. I think it's interesting. I think not all housing advocates are completely, we should go with the income-based model first. But I'm certainly hearing from housing counselors that they all get it. For people who work directly with people, they kind of see the choices to be made. And while everybody can appreciate the efficiencies of the regular modification of the streamlined mod, the income base is a much better model to meet what people's actual sustainable, affordable needs are. So let me just check in, Matthew, if anybody's wanted to weigh in on the affordability question or anything else on that.
No, we haven't had any comments on that yet.
Okay, all right, no problem there. It is in our world kind of one of the big threshold issues, and I think that if we can win, and we do have strong support, interestingly enough, it's kind of cleaving. FHFA was leaning towards streamlined. CFPB has vigorously, internally in the administration, pushed for income-based. Treasury supports income-based, trying to get the White House involved. I mean, there is a big push and pull. But if we want to have a future in loss mitigation, we need to figure out what a model looks like that gets people into counseling automatically, and that we can get them the right mod that fits their needs. We already know that if you go to counseling, you're much more likely to get a mod, it's much more sustainable, and much less likely to redefault. Well, this is the moment where these kind of policy debates will decide whether we're in the loss mitigation business or not. The one corollary thing that we're doing right now, which is also a conversation we're having with Fannie, Freddie, and FHFA, and going to CFPB on, is can the servicer give contact information about delinquent borrowers to the counseling agent, to the HUD-approved housing counseling agency, and without having to ask their permission ahead of time. And the belief is, on CFPB says, yes, you can. The lenders and servicer lawyers are saying, no, you can't, or it's too risky. We think we'll be violating Graham Leach Bliley. And so we are going to sit the parties down, hopefully next week, on this. But if there's a way to flow business to you directly and for you to get paid, then we'll have models that can allow loss mitigation as a way for counseling agencies to go work in the future. So on that note, if you haven't already, this is the kind of work you support if you join NHRC. And we need more members. It's part of what our strength is. It's how we get recognized. It's how funders think of us as showing real support. And right now we've plateaued in our memberships, and your groups have benefited directly from our work, and we want you to. We want you to thrive on this, but we do ask that you join, it's a staggered membership based on the size of your housing counseling budget, so not your entire organizational budget, just your housing counseling budget. You get a bunch of benefits from it, and frankly, it's very valuable to have the foundation directory, and we have a very nice escalation chart for the servicers that you can use that Matthew did a lot of work on. There's the Federal Home Loan Bank down payment assistance programs. We have a guide for those for all the different lenders in different regions, which is a very useful tool, an underused program, which we need to get more groups using. The Federal Home Loan Banks were at the Leaders in Housing Counseling Conference. We're going to do some initiatives this year around trying to build collaboratives to strengthen housing counseling on a state level. And certainly if you've got one that you'd like to grow, or if you've got the idea that you'd like to have it in your state, we're going to do a series of webinars on this and try to figure out other ways to build support around this idea. We do need to figure out funding sources outside of the federal government. And we're doing lots of work, certainly on the federal funding side. And many of you benefited from the settlements, where we really helped shape what they look like. I have to say I'm not hopeful that we will, in the current environment, see more money coming from these settlements, though we are trying to urge that happens. So join NHRC, please. The membership form is on our website, upper right-hand corner. Well, it's not up in the corner, it's up in the bar. Just look for membership and click away. We can really absolutely use your support. Next week, we're going to have, in early April, we will have Lisa Rice on our call from the National Fair Housing Alliance. She does an excellent talk on credit scores and their impact on people of color and communities of color. It's part of all their work around fair housing issues. But she has some very interesting content and nuance to talk about, and it's helpful to hear. I think some of this you'll be very familiar with. Some of it, hopefully, is new information. But it's part of our series of really trying to help educate ourselves about the racial wealth gap and home ownership. And in early May, we'll have Jim Carr, the distinguished professor and research analyst who had a long history of Fannie Mae and has been with a number of foundations and with Center for American Progress. And he's, I think, teaching at Case Western now. Actually, I'm not sure. He's teaching, I think he's teaching in Detroit. But, you know, he's a deep thinker in our field, in the field of housing. And so he and I have been in conversation for quite a while, and he's on the books for early May. So we'll keep doing more of these kind of conversations, and if you've got things that you think we should be covering, please shoot me an email. We are very interested in staying relevant to the work that you do and want to help augment it. All right, thanks for another good call, and we'll talk to you in a couple of weeks. Thanks, bye.